of all the OECD countries. So I think the lessons we can learn is that when it's hard, we have to get a grip of ourselves, we have to push for reform, we have to continue to integrate and innovate, and from our perspective as a central bank, if anything, it should push us in the direction of the capital market union, of banking union, and making sure that capital flows and can actually fuel innovation in Europe. Thank you.
The next question goes to Andres Stumpf of Expansión, the Spanish daily.
Thank you. How important was for the decision and the debate the fact that even with the new rate cut, financial conditions will remain restrictive? And the second question, do recent macroeconomic surprises grant a downward revision on growth in December? Thank you.
October is not December. I cannot tell you today what our December outlook will be and what the projections will say. I think we have to be nimble, we have to be attentive to the data that we get and work on the basis of that. On the issue of being restrictive, I made the point, we are restrictive at the moment at current rate. Even with the 25 basis point cuts, we will continue to be restrictive. And we believe that it is necessary and would have to continue to be so until we are confident that we are reaching the 2% target in the medium term. And that will come in due course, but we are not there yet.
And the next question goes to Spela Mikus of Finance, or Finance, Slovenia Daily.
Hi, thank you. You've mentioned you do not foresee recession for the euro area, but at least from Germany, we are getting some worrying data. Is there still a chance that this may turn so that we might see a recession in the euro area? Thank you.
Well, thank you for your question. Even with one of the member states, however large it is, facing difficult circumstances on the basis of what they themselves are producing, it does not necessarily imply that the whole of the euro area is going to be affected in the same way. And based on the information that we have at the moment, we do not see a recession in the euro area. Of course, we will have to be attentive to particular sectors of the economy. And as we stand here in Slovenia, which is a country that participates in the supply chain of the automotive sector in particular, of course, many countries will be paying attention to these sectoral developments. But to your specific question, do we see recession? The answer is no.
And the last question today goes to Fabrizio Goria of the Italian daily Stampa, joining us via video. Fabrizio, please.
Can you hear me?
Yes, very good.
That's perfect. President Lagarde, you talk about fiscal consolidation. Government must steadily reduce deficit and debt and public debt. The IMF said the same thing just a few days ago. What are the market risk in the event of a failure to consolidate? And the second question is about bank consolidation. There's a huge debate in the Eurozone. Do you see the bank consolidation as an opportunity for the area in order to compete more in the global market? Thank you.
Thank you to you. Two consolidation questions. Look, on fiscal consolidation, we now have a fiscal governance framework that identifies the right equilibrium and balance between fiscal consolidation that is needed in many countries and the necessary investment into growth-enhancing reforms. And I think it is that balancing act which is the virtue and the value of this revised governance framework for fiscal purposes. It's associated with the time frame of 4 or 7 years, depending on the level and degree of reforms that the member states will propose and will implement. So if those railguards are followed and observed by member states, we believe that it's the right environment within which to develop activity, and from our part, while the fiscal authorities will do what they have to do in fiscal terms, while the authorities will have what they have to do in structural reforms, we will do our part by maintaining price stability. But of course, we are interested in what they do, because everyone has to play their part. Now, on your bank consolidation question, I have said that last time around. I think I forgot whether it was you asking me, but our view is that bank mergers, to the extent that it strengthens the banking system, and on the basis of the cost-benefit analysis that the shareholders and the stakeholders conduct, which is not to say that we are directly involved, other than through the supervision authorities that we apply to the requests and applications that are filed with us. It is for them to decide how to progress those projects. And I'm not referring to any particular project, as you know. Thank you.
That brings our press conference to the end. The next press conference is going to be in Frankfurt on the 12th of December. And up until then, we wish you all the best. Thank you.
Markets never sleep, and neither does Interactive Brokers. Discover more opportunities with CME futures across equity indices, interest rates, FX, energy, agriculture, and metals. Access CME futures around the clock at Interactive Brokers.
Katie. All right, let's take a look at these markets. Of course, U.S. markets opened about 8 minutes ago, and already we're at an intraday record on the S&P 500 right now. If we show that, of course, you will see green on the screen. There you go. The S&P 500 up about 0.2%. The NASDAQ 100, an interesting one. Big tech leading the way higher right now, currently up about 0.4%. Small caps, they have been your winner over the past 2 days, but giving up the lead right now. The Russell 2000 down about 0.2% on that small cap index. Meanwhile, let's take a look under the hood right now and take a look at Uber and Expedia. This is fascinating. The FT reporting that Uber approached Expedia about a potential $20 billion buyout as it looks to expand its travel business. Of course, the FT also reporting that discussions are no longer happening, and you can see the fallout in shares right now. Uber down about 0.2%, and Expedia currently higher by about 4%, Shanali.
Absolutely fascinating report. We're also going to keep an eye here on Blackstone because it posted an increase in third quarter profit, and its credit arm became the biggest business by assets. Blackstone just soaring, up 6.5%. It held a total of $1.1 trillion of assets by the end of the quarter. We're going to bring you my interview with COO John Gray in just a few moments. And guys, that firmly brings Blackstone's market cap above Morgan Stanley's, Goldman Sachs's, Blackstone's, and Citigroup. BlackRock, right. Oh,
Yeah.
gosh, I did that
Their
to
market
myself.
cap is exactly the same as their market cap.
No, they're both black
They came from the
rocks.
same place.
TSMC's profit grew 54% to $10.1 billion in the latest quarter. That beat estimates, but most importantly, it raised guidance again and now expects full-year revenue to rise by almost 30%. It just raised that guidance in July. Let's take a closer look at the semiconductor outlook at Bloomberg's Abigail Doolittle. Abby?
And apparently, Matt, a rising tide helps all boats. Take a look at the chip complex right here as that report from Taiwan Semiconductor, the outperformer there, up 9.1%, really helping out the entire space on that big earnings beat, plus the guide. In addition, there was color from the CEO, C.C. Wee, talking about the AI demand and that it's just the beginning, that it's real and it's just the beginning. So investors liking this message a lot. Relative to the guide, let's dig in just a little bit more because it is significant now for the year relative to revenues. They are looking for $26.5 billion versus 24.9%. That's 30% growth on a year-over-year basis versus the 20% growth. You can see the gross margin better and the operating margin a good 300 bips than what investors had previously been expecting. Not surprisingly, if we put TSMC, the ADR, into the context of some of the other chip companies along with the stocks, we're going to see big outperformance here. In white, there is TSMC on the year up a very, very healthy 78%. The stocks itself is up 28%. And then if we take a look at Samsung along with Intel, the real difficult one here in the U.S., down 53%. You can see that TSMC, those shares, that stock, that ADR really being rewarded for a great performance and a good outlook, Katie.
All right, Abigail Doolittle, thank you so much. Of course, the chips have been absolutely fascinating. It seems like as for right now, things feel okay.
I mean, yeah, but yesterday they were horrendous.
That was yesterday, though,
Yeah,
and then we had TSMC. Now we feel better.
I think, it's so interesting that we learned again in the case of ASML that there are different kinds of chip makers, right? Mm-hmm. AI is very different from companies that make chips for cars.
Yes.
And we don't really get an indication of how things are going so well at TSMC. It seems to be all the AI side and not the side that's disappointment to ASML.
Well, also the geographic footprint here and the way investors are perceiving things at this valuation. I've got to say, you look at TSMC, it's up more than 9% today, but anything else you go to is up only 3% or more. So that gain is super outsized. You are seeing that flow through almost the entire sector minus ASML.
Yeah, it's a good point. We've learned about geography, we've learned about actual functions, and we've learned about the entire supply chain of the chip making process just in the past week. Let's keep the conversation going with Alessio DeLongis. He is head of investments over at Invesco Solutions. And Alessio, it's interesting. You think about just this week, we are fresh off that ECB meeting. Of course, all eyes continue to be on the Fed, but then you have idiosyncratic company issues such as what happened at ASML, taking down the entire market. And when you take a look at the balance of risks here, do you think that it's macro that's in the driving seat right now, or is it going to be the earnings picture?
That's really a pivotal moment, right? We have been of the belief that since the payroll report released on August 1st, for the last 3 months, we came back to a macro-driven market. What do we mean by that? A market really driven by the payroll reports, a focus on growth, and that was also validated by Chair Powell's Jackson Hole speech, right? That negated the prior 18 months where the market was driven predominantly by thematic approach, AI, and then to your point, it became really an idiosyncratic market. For the last 3 months, we believe we've been in that macro-driven market. Days like today, days like this week, as you mentioned, could throw a bit of a challenge into that thesis, but let's wait for the next payroll report. In my mind, the key message here, both the Fed and the ECB said inflation is no longer a concern. We are going to target, and that is a perfect setup for a macro market.
Right? I mean, if you take a target at 2% and you look at the core, which is like 3.2, it's still sizably above it, whereas the ECB has come below 2%, And even though Lagarde is being cagey about how quickly she's going to get rates way down to far below what our terminal rate is, if you look at a euro chart, Alessio, it's just lost a ton of ground over the past couple of weeks. Do you expect that euro to continue its precipitous fall against the dollar?
The euro has lost ground in the last few weeks, but if you were to enlarge this chart to the last 2 years, you've basically seen a very predictable range between 106 and 112, which also matches basically this path of relative monetary policy where they're just in lockstep. When you take, to answer your question, euro to weaken a little bit more from here, we remain overweight the dollar, and it's mostly due to still the ongoing outperformance of the US economy relative to the Eurozone or emerging markets, which obviously tend to benefit the euro. But do we expect to break that range and past the 106 floor that we've seen for the last 2 years? I doubt it. It's very difficult. Why? You project policy forward, I think you guys mentioned it earlier, out to September 2025 and December 2025, the expected change in yields is precisely identical between the US, the ECB, and the Bank of England, right? So we are in an environment, this is a perfect environment for policymaking, for monetary policymaking, where the FX rate is actually in a relatively low volatility range.
What about the spillover effects? Clearly, through the questioning that you saw Christine Lagarde getting at the ECB today, people are worried about a softening of the European economy, and there were questions about why not 50 as well. If the European economy weakens meaningfully, what can you expect in the spillover to equities, both European and US, given that you do have some crossover?
I do think that is the tail risk. In my mind, the repricing yields that we saw in the last few weeks that took, for example, treasuries from 360 to 410 markets tend to lead the developments in the data. So this good patch of economic data that we've seen, I would say was largely discounted by the equity rally and the bond sell-off. The risks in my mind now going to the US election, going to the next payroll report is for some marginal downside risk. You're absolutely right. The economic data is still very weak, and that's why the ECB is in a bit of a difficult position. The data are still suggesting well below trend growth, but they don't want to re-engineer an inflation positive surprise. All central banks have been really shocked by the inflation surprise of the last few years. That's why policy is still restrictive, but on its way down. I think you're absolutely right. If there is a negative surprise on growth, that will accelerate the path of rate cuts by the ECB.
Alessio, thanks so much for joining us. Alessio DeLongis there of Invesco Solutions, talking to us about these markets and central banks. We want to give you a bit of breaking news on the conflict, the war in Gaza right now. Israel has said that it may have killed the Hamas leader Yahya Sinwar, part of a renewed assault against the militant group after more than a year of its war in the Palestinian territory. It is not confirmed. Israel's IDF said they are checking the possibility that Sinwar was one of the 3 people killed. We know from CNN that they're using DNA testing, and we have heard reported by